Good afternoon. Good afternoon, traders. Welcome to Paul's Monday Market Update, number 217 for Monday, 9th of March, 2026. Great to be here. Hopefully, we will not have the tech problems that we had last week. Apologies again for that. I think that was just every man and his dog was on the internet that day, and for obvious reasons, which continue and give us a lot of the detail for today's session. Whether you're joining us live or whether you're watching the live stream, I hope that you can see the slides. Hope you can hear my voice. I hope that you are well and safe wherever you are joining and watching us from. The Monday market update is just that. It is me flying through as much as I can cover in the next 25, 30 minutes, looking at strength and weakness within FX markets, looking at some charts of interest to add to your watch list, and then a look at the live markets. It is not a signal service. There are no trade recommendations. It is just me sharing what I'm looking at, which may be of relevance or help and support to yourself. As always, you are very welcome here, but just remember you are always responsible for your own trading decisions. Also, if you want a little bit more help and support in your trading, regardless of how you trade or what you trade, the VTP Trader Accountability Group is up and running, helping people build discipline, accountability, and consistency in their trading. Okay. If you want more details, you can ping me, or once again, that QR code will take you to a page with more detail. And finally, ETF, all right, the State Street Industrial, sector ETF, XLI. So XLI tracks kind of major US industrial companies that focused on manufacturing, transport, infrastructure investment. So like what we looked at with CAT, etc. Boeing, a whole other big companies in this. The sector often performs well during economic expansion and fiscal spending cycles. All right. However, strength in kind of XLI kind of typically signaled confidence in the industrial economy and the global overall global growth. And so, what I'm interested in is here last week, having had a fantastic trend. It's been a fantastic trend, super trend, absolutely beautiful. But what we printed here was this is a bearish engulfing candle. This is a bearish key reversal candle. Price pushed to new highs, tickling the soft underbelly of $180 before rolling over and closing beneath the lows of the previous last 3 weeks candles. Okay. Having pulled away from the moving averages. Okay. So one swallow doesn't make a summer. All right, one candle doesn't mark the exact top of a market. But what I start to look at is when I see this, it starts to come onto my radar because I start to look at possible scenarios. Scenarios being that basically we push to the 20, we come back up, make a lower high, and then push to the 50. That is one of the scenarios that I'd be looking at. Okay, especially if this conflict continues. If there isn't, if we get a quick ceasefire and a curb to it, well, then invariably there'll be a relief rally. But these elements, they are linked to they are linked to the kind of that geopolitical sector. Okay, the geopolitical sentiment, rather, ladies and gentlemen. All of that has a huge impact there. Okay, and that's what we're seeing, and that's the kind of scenario I'd be watching for over the next few weeks.